Welcome back to another weekly review. In this one, I will be covering the NQ in the week of November 17th, 2023. Something I will be doing differently from this week on is including the live trades I've taken during the week and breaking them down as well in hopes that it will be insightful for you guys. This week, I decided to look for trades as I was expecting Q2 of November to be bullish. To determine my high probability trading days, I used the news events of the week as a roadmap to navigate volatility in the market. Heading into this week, I was mainly looking for an AMDX profile as Monday had no news and wanted to see Tuesday create the low of the week since it was CPI. As we break down price later, we can see that this week's profile was very similar to last week's, and because of this, I traded it very similarly. As this was the second quarter of November, I was expecting manipulation to the upside into the September high. In terms of seasonality, I wasn't too interested in DXY's correlation right now, once again, as price charts are not moving in correlation as nicely as I would like them to. Even so, by utilizing the seasonality chart, I know to expect that DXY is an open low high close month, and indices being in inverse would be an open high low close month. Once again, starting my analysis on the monthly chart, I'm anticipating bullish price action in the long term as price has traded into a discount bullish fair value gap on the monthly impulse. This is also an added confluence with the completion of the monthly treasury bond market maker sell model mentioned in last week's review. Currently, I am looking at the monthly range high as a possible draw on liquidity as we have tapped into internal range liquidity. Dropping down to the weekly chart, I understand that if Q1 of November seems to be consolidation, then Q2 of November should be manipulation. I made the assumption that the manipulation would be bullish since my seasonality gives me an idea of where price would likely draw towards. Originally, I was bearish headed into this week, but once my narrative was being built, I switched bullish, looking for a Tuesday or Wednesday high of the week. On the daily chart, by utilizing projections, I had a general idea of where I would want price to have a change in the state of delivery. This projection lined up with September high and aligned with my bullish bias. With this in mind, and understanding from the previous weeks that bearish PD arrays were being disrespected, this made sense. Dissecting price further on the hourly chart, the projections of the daily were in alignment with the hourly projections from Monday's manipulation, with September's high. This is where I was expecting price to reach for, but because CPI is a no trade event for me, the market took off without me. With my narrative in mind, this is where I started to seek out shorts once the hourly chart presented bearish price action. Otherwise, I was scalping the lower time frames. On Monday, I was still expecting a Tuesday or Wednesday low of the week, but once CPI news was released on Tuesday, I immediately correlated this week's profile with last week's with that Monday low of the week. So you can see here, on Monday, we had that manipulation expansion higher. Same with this week, we had that Monday manipulation lower and then that expansion higher. In this slide, I zoomed into the hourly chart a little more so it's more visible what I'm annotating. Utilizing the true month open and the true week open, I further built onto my narrative of bullish manipulation during the second quarter of November. After CPI had traded into September highs, I look for either bearish price action for a reversal on the hourly chart or reason for continuation to -4 standard deviation, which would be my weekly objective for a reversal. So over here, -2.5 was aligning with September high, also in between that daily projection. From here, I'm looking for bearish price action to look for a change in state delivery, which we do not get, and instead we trade up to the -4. In this slide, I annotated the fair value gap I was paying attention to once September high was taken. So that would be this fair value gap right here. If we were bearish from this point, I would have liked to see a bearish displacement inverting this gap. In this case, price supported higher, and because of this, I expected further bullishness into the -4 standard deviation as my weekly objective. So here we see that we supported from this internal range. So I'm looking for a continuation higher into that -4 standard deviation to then look for bearish price action. On Tuesday, I took this trade after CPI news release to showcase the mechanical unicorn model that I gave a lecture on. You can also find that on my YouTube channel page. Unfortunately, my 2R wasn't tagged, but I exited once price showed unwillingness to displace to my target. So right here, I was hoping that price would displace through this low into my 2R target, but unfortunately I saw it reject once, trade under, reject a second time, and so right here I exit the trade. This trade put me in a 1.43R profit. Once the -4 standard deviation had been hit on Wednesday, I turned my attention to the bearish order block's open price for an algorithmic signature that would support my idea of a change in the state of delivery. So right here, I'm looking, once we hit that -4 standard deviation, I'm aware that we took a major liquidity point on the higher time frame. So I'm now looking for a change of state delivery at that -4 standard deviation. So once we trade under that order block, this last up close candle, I'm looking at the open price of it, and I want to see an aggressive sell off from the open price. At this point, I saw a 15-second market maker sell model on ES and took the short after the PPI news manipulation. So this is the 15-second market maker sell model I spotted on ES. Some may call it ugly, but in my eyes, she's beautiful. With the narrative from NQ in mind, I saw an inversion gap form after Q1 of New York sessions high was rated, and nested within it was an RDRB, indicating that the gap above was a breakaway gap in a market maker sell model. So once the inversion gap formed, I took a sell and targeted the original consolidation as my target. Normally, I like to use projections, but in this case, it projected very far. This trade was 3.8R. The next trade I took was on Thursday. I was looking for further bearishness as I was expecting Wednesday to be the high of the week. In terms of quarterly theory, Thursday was my expected distribution phase. We had our accumulation on Monday, accumulation manipulation Tuesday, and I wanted to see distribution on Wednesday, but because we created that high of the week, I was expecting now Thursday to have that continuation lower. During the New York AM session, I spotted clean highs for manipulation into an RDRB to distribute lower. Once this was manipulated, I looked at the lower time frames for a market maker sell model. So right here, you had these triple highs. It was Asia, London, and current New York Q1's high, I believe, traded into that RDRB over here. And I was looking for that market maker sell model. On the 15 seconds, a clear market maker sell model had formed at 9 a.m. right when Q3 began. So with all this context supporting my bearish idea, I executed on this market maker sell model, expecting Q3 of the New York session to distribute lower into the original consolidation. So when I got to my desk, we were up here and we started to trade lower, and I was looking at this as my original consolidation, as this projection lines up with the original consolidation low. My executions for this market maker sell model were on the 1-minute chart. I took 3 executions on this day, 2 wins and 1 loss. My first trade was a short from the fair value gap rejection to reaccumulation low. From here, I was expecting a higher retracement before a lower run, which didn't occur, so I missed out on part of the move. And the second trade was an inversion scalp, but I was careless and didn't realize that 9:30 equity open was right when I opened my trade. So I was instantly stopped out of this trade for 1 hour. So right here, we got this inversion, and I wanted to trade into this internal liquidity, but unfortunately, I didn't keep an eye on the clock, and 9:30 open was right here. My third trade was a short from the manipulation of redistribution high. This was the silver bullet setup I noted in my execution video. So above these highs, I was looking for a sell into, once again, this original consolidation low. In total, all these trades added up to 3.62R. In this slide, I annotate the trade idea. So once I saw this fair value gap get rejected on the 1 minute, I was instantly looking for sells for this market maker sell model to play out. My final trade of the week was a 1 minute market maker sell model on Friday, once we tapped into a 15-minute fair value gap above buy side liquidity. So here on NQ, we have these equal highs. I was looking at this 15-minute fair value gap drawn out in time, and once we hit a higher time frame level, I'm looking for that lower time frame market maker model. So the entry for this trade was very discretionary, as I entered once I saw my anticipated distribution phase high was manipulated into an imbalance that caused a bearish reaction. So here I was watching this phase right here, distribution, and once we traded above it into this imbalance here, also a unicorn model because we have a breaker and an order block, and then fair value gap, I was looking at that. And once we reacted bearishly, I instantly executed and targeted this accumulation low. I targeted this accumulation low as the low hanging fruit that was aligning with my -2 standard deviation perfectly. So this trade was a 6.13R trade, putting my week's total at a 14.85R. This week was a very successful week, as I am now over halfway complete on my top step evaluation and up on my funded account as well. Regardless, heading into next week, I will remain level-headed and accept that every trade will have its own individual outcome, meaning I won't expect wins and I won't get into my own head. So that brings me to the conclusion of this weekly review. Let me know if you guys like the trade reviews and if I should keep including them. As September high has been purged, I am now interested to see if there is bearish evidence to trade lower into a weekly internal range liquidity, as on the hourly chart we already have that bearish market structure shift and change in state of delivery. So heading into next week, I would most likely be bearish. As always, let me know if you have any additional insight on my analysis, and I hope you all enjoyed this weekly review. And as always, have a great day.